Good morning, everyone. It's Friday, July the 10th, and welcome to 7 Investing Live. This is our live stream event we host every Monday, Wednesday, and Friday to put a spotlight on several of the stock market's most innovative opportunities. My name is Simon Erickson. I'm the founder and CEO of 7 Investing. If you would like to see all of our official stock recommendations, you can always check out 7investing.com. And if you'd like to dig deeper, look into our premium content, look at our monthly best buys, you can actually get your first 7 days completely free. 7investing.com/subscribe. I'm joined, as always, by our executive producer, Heather Horton, and we've got 2 special guests for you here today. This is going to be a really fun show. I've got Ryan Henderson and Brett Schafer, both from Chit Chat Stocks, a fantastic investing-related podcast I highly encourage you to check out. They're on the show with me here today. We're going to be talking about prediction markets and the impact that will have on the investing world. Ryan, Brett, you guys, I feel like, are some of my best friends in this investing world we're a part of. I speak for everybody when I say welcome to 7 Investing Live this morning.
Glad to be here. Yeah, we've known you many years now. We've gone on your stuff. We work together. If any of the listeners of this want to hear more of Simon's work, I'd say listen to the Chit Chat Stocks podcast for some analysis on Duolingo. Our listeners loved that episode. But yeah, glad to be here, ready to talk prediction markets and the future of trading, sports betting, and really betting on everything, right?
Yeah, I'll just echo that sentiment. Simon, I think you've been maybe one of our longest running friends of the podcast since we've started it. I think you've probably been on the show more than 10 times or something like that. And yes, you did we just had an awesome interview on Duolingo. So if anyone's interested in more of Simon's work, I recommend checking it out.
Well, thanks very much for the kind words, guys. Right back at you. I'm a big fan of your podcast as well. But I do want you guys to take me seriously here for a moment. We need to talk about the World Cup. Heather, let's put it up there. Let's put up the graphic. Here's who's left. This has been an exciting year. A lot of surprises there. I'm bummed that Brazil's already out. But you can see, here's the 7 teams left out there, right? Spain, Belgium, France yesterday, big win for France. Norway, England, Argentina, and Switzerland. This is a question for all of you, Ryan, Brett, and Heather. Who's going to win the World Cup out of these remaining teams we got?
Yeah, well, if it's
go ahead, Brett. Go ahead.
If it's all equal odds, I think it'd be criminal not to say France. But if we toss some odds in there, maybe I could see where a value play is. Norway could, maybe plus 800, 8-1 odds, something like that.
Love it. How about you, Ryan?
If we were putting some money down on the prediction markets, I think I'm probably aligned with Brett there and say France. But if we're going with who I'd like to see do well, it's hard not to root for Norway.
Okay, Norway, two fans for Norway there. How about it, Heather? Who's going to win this year?
I think it's Norway. I love, is his name Haaland? Probably saying it wrong, but that guy, love him.
And the rowing, right? You got to love the fans with the Norway row. Being Norwegian to some extent myself, I got to root for them too. Knocked off Brazil too. Holy cow, what a bunch of upsets we've seen. That's the way that we kick this off. In fact, Ryan, you gave me the perfect segue line that if we were betting with the prediction markets, where would we put our money? It turns out there are a lot of people that actually are betting on the World Cup through prediction markets right now. In fact, the FIFA World Cup this year has already, by midsummer, cleared $3 billion of wagers being placed on prediction markets, the 2 largest being Kalshi and Polymarket here in the United States. To give everyone kind of an idea of what these are 2 websites where you actually go predict the outcomes of sporting events, of presidential elections, of almost anything out there on whether or not it's going to happen, yes or no. The monthly trading volumes of these platforms was less than $1 billion a piece in early 2025. In June 2026, last month, the combined volume of Kalshi was more than $30 billion, and Polymarket was nearly $11 billion. So depending on how you look at it, that's either a 10x increase or a 30x increase from where we were essentially 1 year ago. Yes, we know there's World Cup out there. Yes, we know that some of this is from NFL. Other things are going on out there. But this is a meteoric rise, gentlemen. I mean, Polymarket and Kalshi and these other prediction markets, they're kind of taking the world by storm right now. At the 20,000 foot level, do you have any thoughts about what's going on out there with the prediction markets?
Well, maybe I can go first. I don't think it's going to. when we're investors, we kind of look at what could potentially get disrupted. You look at the brokerages, you look at sports betting. It seems like the largest threat is probably to the sports betting markets, but when you're looking at brokerages or stock trading in general or financial markets, if we want to broaden it out, I feel like the biggest threat or maybe replacement that could be going on here is replacing the options market, the futures market, because if you can put on a bet on prediction markets that are much cheaper than what you could get or more accessible for what the price of wheat will be, if that's what you care about. That feels like something that could easily get replaced here. And I'll mention them again later in the show, but Interactive Brokers, company, the stock I own, they've been investing in prediction markets specifically for this, for stock traders, for people out there that want a better way to hedge exposure to things. Now, that's a little different than Kalshi and Polymarket, but in general, yeah, I'm just thinking about how it can disrupt current betting and the brokerage landscape.
Yeah, that's a really good point, Ryan. I'll get to you in just a second, hear your thoughts, but to one double click on what you said there, Brett, these are traded as event contracts, right? It's not like commodities, we're trading for futures, things like that, like we're so used to with CME Group and, companies like that. These are events that have happened, some of them sporting events, and they are treated like derivatives, at least on how they're regulated. Great points that you bring up about how that might impact them. Any thoughts, Ryan? Anything that's going on in prediction markets that you're watching right now?
Well, I do have maybe some societal concerns with all the money going to sports betting, but on the market side, I do think it can potentially, these sort of binary, I guess they're not securities, but events, binary outcomes can have their place in some sort of a strategy, especially if it's related to specific like KPIs or earnings results. Like, you could be right on the earnings if you think a company is going to beat. This isn't how I invest, but you could be right on the earnings or KPIs surpassing a certain level for a quarter and be wrong potentially on the stock. The stock could trade differently to the outcome, which we see all the time, right? Companies beats earnings and stock drops. So, maybe there's sort of a hedge or a way to kind of implement these in people's strategies. I do think brokers probably are beneficiaries of potentially more transaction volume if they integrate it properly. Like Brett was saying, there is the risk to some marketplaces. I'm thinking about like CME Group, New York Stock Exchange, maybe, although I think they just took a big stake in Kalshi, if I'm not mistaken. Where potentially volume starts to shift away, at least in the short term. Regulation could change things, but yeah, it feels like a massive open opportunity, and we don't quite know how it's going to shake out for a lot of the companies in the financial market space.
Yeah, great point. Heather, if we can, let's pull up some of these prediction markets. Let's actually pull up, if you have a link to either Polymarket or Kalshi, so we can kind of take a look at how these look. We can maybe explain a little bit about how they might be different than some of the other that are out there. There's Polymarket. You can kind of see there's all of these different wagers you can place on a variety of different topics. World Cup winner, France, Argentina. Okay, so there's France again there, guys. I guess Norway didn't make the top two, unfortunately. What do they know, though? There's other things, a lot of World Cup stuff here. Political events, is the U.S. going to have a blockade out there? Wimbledon, the NBA, stuff that's going on in AI. There's the variety of different topics. And of course, one thing that is important to realize about these, they are event-based contracts. They have a yes or no, this or that, so that everything can be between 1% and 100% probability of happening. The other thing to keep in mind is they have a very clear expiration date. You can't just buy and hold prediction market bets like you can with stocks. You're kind of taking a one way or the other, one side or the other every time you're placing one of these. And as you all were mentioning, the take rates are vastly different because this is peer-to-peer rather than playing against the house. One of the biggest advantages of prediction markets is, say that Brett was going to bet on the first one here. What will pick any one of them you want to there. Okay, here we go. What will WTI crude oil hit in July 2026? All people betting on this say that Brett and Heather and myself and Ryan all wanted to place a bet on this. This is all directly from peers. This is not the house setting the odds and then you're playing against the casino or the house itself. These are all peer-to-peer markets that are happening directly. And because of that, you have a much more efficient market than you do when you're playing against a casino. It was typical that the juice or the vig or whatever you wanted to call it in Vegas, when the house would always win, that's not necessarily true anymore. Depending on the bets being placed or the game that was being played, a lot of casinos and even online sports betting would capture 7 to 10% of the total pool of assets that were wagered, the pool of what was being wagered out there. That's a pretty high payout. It's more traditional for a prediction market to take between 0.7% and 1.5% of the pool out there. I think that gets back to what you were saying, Brett, that this might just be a more efficient market. It sounds like that might be in some ways disruptive, or at least pulling down the margins of, kind of the gaming industry and the gambling casinos out there. And maybe.
Yeah, I think the biggest threat is to the online sports gambling websites, DraftKings, FanDuel, and others. There's probably still some kinks to be solved out within the prediction market space. I know the regulatory stuff, I think Polymarket and Kalshi go about it from different angles. And there's also, I think, onboarding fees where sometimes you're using crypto and there's some extra fees there. I remember at least when I tried to deposit money, I got a little bit frustrated on that front, but that's going to be solved. In the future, it's going to be, I would think, they're going to have a free option to deposit money within these brokerage, or I call them a brokerage. They're essentially a brokerage. And then with more competition out there, I feel like that's also going to drive down prices. And the one thing I, from a consumer, would like, or at least as an investor, maybe we should think about these as investing, or you could have a fun account as well, is I'd probably like them, at least if it's not a sports betting account, I would like them to be all within the same platform, which is why I think Robinhood and Interactive Brokers, two of the brokerages out there that are kind of on the front lines of getting prediction markets onto their platform, I think they have a good opportunity here, like they had with crypto, to add new products within their ecosystem, make a better consumer experience or investor experience. Because if I'm looking at, for example, and I don't do this, but if you're investing in a foreign country, a way to hedge is if there's a presidential election and one of them's a big socialist and one of them's a big free markets person. You see this a lot of time in Latin America. If you own a stock tied to that country, where the business is tied to that country, you might want to hedge with the socialist presidential election, because that can either, one, create more, taxes, stuff like that. I think listeners understand how that could impact the business there. There's a lot of opportunities, and I just see huge potential for the existing brokerages to, another way to make money.
My only pushback here, and I think you are right. For the brokerages, they benefit. Should there be more friction from a ethics point of view, but between an investment account and betting on today's World Cup game? I just wonder if maybe it's beneficial for the customers long term, and maybe even these platforms long term, to not commingle the two.
Yeah, that's. I think Interactive Brokers agrees with you, where they're not doing sports betting. It's more economic stuff, hedging things that, like with options and futures, professionals might want. Robinhood, as we all know, might be taking a different angle.
I want to continue on that point, though, Ryan, because I think it's a good one, about the controversy that's being caused by prediction markets. There's certainly nothing wrong with going out there and having some fun betting on who's going to win the World Cup, like we talked about earlier. But because you saw the diversity of things you can bet on, some of this is very highly sensitive in nature. Political outcomes would be one of them, too. There is nothing from stopping someone from flooding billions of dollars into the presidential outcome on the candidate they think is going to win, or that they want to win, so that the odds are stacked in that certain prediction market wager much higher to the candidate they would want. They're essentially influencing the odds based on the money that they're putting in, and that might influence the opinion of the rest of the public. There has also been multiple cases where there was insider information specifically with government insiders that were monetizing what could be perceived as national secrets or sensitive information days before it happened, specifically military actions. Again, anybody can make any market that fulfills the requirements of being an event contract. Some of this is brushing into the regions of, are we uncomfortable with having some of these prediction markets placing bets out there for people, knowing that this is the mass market that's doing, there's no casino that's kind of the gatekeeper of what's allowed and what's not allowed out there. Thoughts on that, Ryan, Brett, or even Heather? It's a very sensitive topic, I think, on a lot of these that are out there. It's not just fun stuff like World Cup and sports betting.
I maybe sound like a bit of a curmudgeon here, but I'm not ecstatic about it. I do think this is the binary nature of these events is benefits those privy to certain information. So, I'm thinking about let's maybe not avoiding the politics side. Let's talk about like markets, for example. I believe on Kalshi, you can bet on Spotify's monthly active users, for example, for the given quarter. There are people obviously at those companies that are privy to the user count. Those people have families. Those people, it incentivizes, if they know that they can make money, and I'm not insinuating that anyone is doing this, and maybe I think a lot of the companies are probably trying to avoid this, but it potentially incentivizes bad behavior, or what you would call insider trading. The other one, and the really concerning one, is potentially how this impacts actual behavior of people that could dictate the contracts. Sports, for example, throwing games, that that kind of, that's always existed with sports betting, but it makes it that much more possible. And then you can think of the implications of political actions as well. So I do worry about that a bit. I would say the big benefit here is that you have an instant gauge on people's views. Like, this was, I think, prior to prediction markets, you couldn't have told me what percentage of people think a company's going to beat earnings, or how many people think Anthropic's going to release their next model before a certain date. Like, now you have an instant view into how things are perceived, and I think that can be kind of nice.
Can you follow up on that? I have one question on that, Brian. Do you think that there is alpha from this information? Is there signals in there, or is it just a bunch of noise of the crowd and how they're bidding? We've seen on this, even with Heather scrolling here, Anthropic, SpaceX, Meta. These are public. A lot of these are publicly traded companies. Are you getting investable information that's valuable out of this, or do you, how do you think about the betting and the odds? Is it influencing you at all?
Me specifically, no, but I imagine there are funds that track this stuff very closely, maybe even use these as a part of their strategy. For example, if to go back to maybe that Spotify users example, and I'm not even sure if that's a specific event, but if you know, maybe you have some sort of alternative data, or maybe you are tracking sort of marketing campaigns or anything specific, and you have a specific view that they are going to surpass users potentially in a given quarter, you can be right on that, and you can make money on that. And if you own the stock and the stock drops after earnings, it is sort of a hedge, because you were right about the fundamentals, but you weren't able to predict the way the stock was going to move. Obviously, that I think that kind of lent itself better to the investors with the most capital, because they have access to the most information. I'm thinking about like Boeing deliveries. If you're able to track that, and you're a big fund, and maybe there's satellite stuff or whatever that allows you to have better information on that, it kind of lends itself well. And I think it's probably why a lot of funds are using these prediction markets.
Heather, Brett, any thoughts on that too? It's a great point that Ryan made about, how you could hedge this, or, the value of seeing the public's opinion out there.
It's beautiful marketing data, I think, just to see how people feel about everything. But yeah, it's dark that there's public health betting on here. Like, it's just very strange. And I think that people will always bet on things, but the to me, the really wild thing on these is how you can, I'll pull it up. It has the volume of how much money is in each bet. And these volumes are just wild. I mean, go back to tech and science. It's not even like that big. Will the US confirmed aliens exist? There's $31 million being bet on that right now. Like,
That's
and
not
it's
even
just
subjective. Or
That
sorry,
is
it's not
so
even
crazy.
objective.
yeah. And it's just like, yeah, some of them are not yes or no. It's like, there's another. But you'll see then like $100,000 on it. Just to me, the volume of these is just shocking every time I look. And some of them are smaller. The elections have huge amounts of money on them. It's something really disturbs me about this much money being in betting, and I'm sure it has been that way. But if you have a gambling problem, like, where are you right now? This just has to be so hard.
That's a great
And-
point.
and
I
real-
I
Go ahead,
think to add on to that, you mentioned the problems with too much access. I think similar to like fund ETF approvals in the stock market, we're probably going to get a point where a prediction market is going to need regulatory approval before it launches. Now, if there's a basic one like who's the presidential nominee going to be or who's going to win the presidential election, that's probably not going to take much. But if it's a novel prediction market, I think it's going to have to eventually get approved by regulators versus, oh, we have this out here. Maybe we're going to eventually have to take it down. I think that's probably where we end up. Because if you look at the data, when these things are launched, at least with sports betting, there's a lot of numbers out there that, people's savings go away, and doesn't seem very sustainable, in my opinion.
It is very interesting. I want to point out that all prediction markets are not the same. They do have the similar function, but one thing that's interesting is there's various benefits that you can have from using Kalshi versus using Polymarket. For example, Polymarket tends to undercut the fees that Kalshi charges. They're typically about 50% cheaper than Kalshi, and they're completely free for geopolitical events. But on the other hand, if you've got a lot of money and you want to make some money on that, if it's sitting in a wager that doesn't happen for a long time, Kalshi is actually paying back up to 4% on idle cash to park your money in the event. So, and then the market makers themselves too. All these markets, like you said, Heather, whether it's $100 million on whether aliens exist or $30 on what's going to happen in a middle school football game here in Texas next week, there's benefit to the people creating those markets. Those are not created by the operators of the exchanges themselves. Kind of interesting. Let's get back and talk real quick about the regulations, and I want to talk about some of the companies that are interesting in this. One thing worth pointing out is typically gambling is a state-based regulation. You've got attorney generals in every state, whether that's Nevada or New York or Texas or wherever you are, that governs and then taxes any gambling revenues that are generated. For those reasons, states like to have the control. They like to generate the taxes. That's why you kind of see so much controversy, even with the online gaming sites, the DraftKings of the world. How can you actually have those be based and geofenced on the state that you're in so you can collect the taxes from where you're gambling from? However, prediction markets, as we discussed earlier, are primarily regulated by the Commodity Futures Trading Commission, the CFTC. They treat them as event contracts. They are placed in derivatives markets, like you were saying earlier, Brett. This is a federally regulated market out there, which is bypassing a lot of those state-based taxes and a lot of those state-based regulations. There's a lot of back and forth right now between the states and the attorney generals of the states and these federal commissions on who's regulating these, where's the money going, where is the volume and the traffic going. I think that's something we have to keep an eye on, not just the controversy of whether we're philosophically okay with some of these being bet on out there, but also where's the money going and who's going to get a cut of that money. I mean, this is kind of a long-standing debate on, a lot of who's going to regulate these markets. Does anyone have any thoughts on that, or do you guys want to talk about the companies?
I think the one thing I'd say is it's probably going to end up being federal. There's always going to be the crypto angle that seems to avoid it. But in the long run, I think people want something that's federally regulated. The fact that the online sports books, the traditional ones, are state regulated is a bit perplexing and probably is just a artifact of the old rules before the internet. So that's the only thing I'd say is I would think there's going to be federal legislation or regulation around it.
Yeah, I don't have much to add. I don't know how it would be regulated, but I think everyone's kind of in agreement that someone probably needs to step in and maybe crack down a little bit on the contracts that are available because it can incentivize bad behavior.
I want to pull up a graphic here from Fiscal AI. This is where Ryan is the head of research for the great work that they're putting out there. This is DraftKings. This is just kind of a real quick look at the financials of DraftKings. You can see in the orange there, this is the revenues of the business over the last several years. You can kind of see that they've now pushed to being earnings per share positive, and the operating cash flow has also gone from negative years past when they were building the platform to now very positive as they're monetizing it. This is just to open up the discussion of these platforms tend to scale quite well over time. You tend to put in the work up front to get people interested, to kind of put in the R&D to build them out. And then when the volumes, you kind of start seeing the network effects, you start seeing certain platforms getting all the traffic and others not getting as much. This is where you kind of get the bang for your buck and you start seeing those cash flows coming in. DraftKings, I don't know if I'm ready to say that this is one of the best publicly traded stocks to play this. It seems like they're kind of fighting it from both sides. They see the opportunity for prediction markets. They do have a prediction markets group that is benefiting from this. But on the other hand, you're kind of cannibalizing, I think, some of your existing business, being that they were an online sportsbook before that was getting a much better take rate before. Same thing with Flutter Entertainment. That is the parent company of FanDuel. So that's one that I think to keep an eye. I think it's both an opportunity and a threat for those online sports gambling sites. Brett, you had mentioned Robinhood and Interactive Brokers, the exchanges earlier. Is this an opportunity for them? Is this a threat, or how do you think this impacts those types of businesses?
I think it's pretty much all upside for those two, at least brokerages in general. And I like those two because they are always on the forefront of kind of what's next. They get, for example, crypto on their platform much easier or much faster than everyone else and at generally a cheaper price. I think with them, as long as they stick within the investing niche, you're not going to generally say, hey, I'm going to go to Robinhood to bet on this sports game, or I'm going to go to Interactive Brokers to bet on this sports game. If it is related to financial markets, it's another way someone can invest, hedge, or trade. And more trading activity, more dollars flowing through your platform, whether it's fees, high frequency trading, or just earning interest on customer funds, the more the better. And the interesting thing I want to look at is, and they have Heather's pulling up the Interactive Brokers website right now, is the volume across Interactive Brokers, specifically I think probably Robinhood as well, unless they partner with one of these platforms. It's quite low compared to the Kalshis and Polymarkets of the world. So that's the one thing I'd be looking at is what can they get scale? Because as you mentioned, Simon, these sort of platforms can have basically network effects, economies of scale, however you want to do that. There's advantages to having more users. There's advantages to having more volume flowing through your platform that makes it hard for an upstart to go for. So I'm just fascinated on how it's going to shake out because it feels like a market that whether it goes to an existing player, DraftKings, Interactive Brokers, and or others, or if Kalshi and Polymarket kind of get that scale, there could be good business models out there. And the one risk is a regulatory crackdown.
Yeah, I want to talk about one more thing on this, which is the valuations, because we've got a blend here of publicly traded companies that are not all apples to apples, right? We've got different business models of a brokerage versus an online sports book and anything like that. And then also the privately traded companies too, right? Kalshi and Polymarket are both private. I'm going to spot everybody up. You guys have got to pick one that you're most interested in as an investor. No one's holding you to this. We're not creating a prediction market for this where you can put the odds or anything else in your favor. But I've got 1, 2, 3, 4, 5 options to invest in. We'll start with the largest, Interactive Brokerage, IBKR, the ticker on that one, the one that you mentioned earlier, Brett, $161 billion, a much more large, diversified, consolidated brokerage, upside from prediction markets, but certainly not tied or a pure play on that. Robinhood is the second option, $100 billion market cap. We know Robinhood has got a lot of arms as well, maybe a little bit smaller than Interactive Brokerage, but we know that it's looking at kind of these innovative new things. It moves pretty quickly, at least from what I've seen them doing so far. The third is Kalshi, privately traded company, estimated market cap of $22 billion after raising $1 billion in their Series F back here in May. $2 billion a year in current revenues annually. So 11 times sales in the private markets. You can say that we can invest in that one right now, being that it's a lot more expensive than the traditional brokerages. Polymarket, it's at $15 billion, a little bit smaller, $1 billion in annual revenue, so about 15 times sales. And the smallest of all these five actually is DraftKings, about a $13 billion public market valuation right now, which is only 2 times its annual revenues of $6.3 billion. So, okay, Brett, I'm coming to you first on this one. You get Interactive Brokers at 160 billion, Robinhood at 100 billion, Kalshi at 22 billion, Polymarket at 15 billion, or DraftKings at 13 billion. Which of those are you most intrigued by as an investor?
For me, it comes down to DraftKings or Interactive Brokers. And despite Interactive Brokers' high valuation, they're benefiting in their traditional business from being one of the first to have a direct access to the Korean exchange, which people are kind of getting really bullish about. And their valuation, to me, looks a little bit stretched. But with what I think is just a fantastic competitive advantage, if I look at these other businesses here, they don't get me too excited. And even though DraftKings might trade at the cheapest price, I really worry about the long-term business model for the traditional sports betting platforms. You mentioned the price war is just going to have to make them rethink things. It's a huge disruption risk. So I'm going to go with Interactive Brokers. I'm not a fan with Robin.
Interactive Brokers for Brett. How about it, Ryan? Which one are you going with?
I would probably go Interactive Brokers as well. And I think my closest second one there is probably DraftKings too. So I'm kind of copying Brett on this. DraftKings, the only concern for me with DraftKings, and I think the numbers look pretty good, and they've turned to generating quite a bit of cash. But how high are the switching costs would be my question for a customer who's using DraftKings. Now, there's probably some familiarity with the platform, and that's nice, but it's super competitive, as we've been talking about all day today, or this whole show. Whether it's the prediction markets, whether it's other sports betting apps, it's very, very competitive, and all these platforms are spending a ton on marketing right now. So, and including DraftKings, and they have to spend a lot on marketing to fend that off. So, I just wonder what the lifetime value is for some of these customers, and whether or not it's really worth the trade off. And might feel like it is now, but obviously there's the risk of them switching. So, I would probably go Interactive Brokers.
That's 2 for Interactive Brokers. I'm coming to you next, Heather. Who are you going with out of those 5?
Well, it would be Interactive Brokers, but that sounds boring. I don't really like any of the others, but maybe DraftKings. Who knows? Maybe they'll turn it around. I do agree though that they're kind of self-cannibalizing, and they're making less off this new system. So it's great they're getting into it, but it is gonna hurt their more profitable business, and they just have to hope for volume. But honestly, just from their website interactions, Kalshi and Polymarket both have kind of cleaner websites. I think I would prefer to use those websites. So I'm going to go with Interactive Broker.
Okay, that's the hat trick. 3 for Interactive Brokers, just to mix it up, just to be the odd one out here. If I was forced to pick one of these 3, I would go with Polymarket, actually, at the $15 billion valuation. Super expensive, but was kind of neat. As was it Ryan that alluded to earlier on the show that Intercontinental Exchange actually put in money at a $9 billion valuation, just to see how they could play this and the ties that they've got with crypto too. So this is going to be an interesting space. I think that all of these companies we mentioned are going to be impacted and influenced by this meteoric rise of of prediction markets out there. Any final thoughts, before we kind of conclude? This has been a fun show talking about these. Brett, Ryan, Heather, any final thoughts we didn't discuss or that you want to bring up?
I want to give one sneaky potential beneficiary from all this, and it's kind of like DraftKings here, where you could see it potentially being at risk. But CME Group is one of the largest derivatives marketplace. So think New York Stock Exchange for derivatives, essentially. So that's commodities, futures, options, stuff like that. They have launched pretty aggressively into the event contracts as well. So kind of giving that option to their customers. Yet a lot of investors see them as at risk because we're going through Kalshi there, we're going through Polymarket. You can bet on the oil prices, etc. And I think maybe there is risk that is siphoning off some of the retail volume for CME Group, but investors have basically sold this thing down to, I want to pull up the numbers real quick. It's trading at one of its lowest valuations in 10 years, around 20 times earnings. And if I'm not mistaken, sorry, I'm pulling this data up in real time here. They saw, yes, an acceleration in revenue growth across almost every single category for their contracts. So futures saw accelerating revenue growth. Commodities, agriculture, energy, all of these saw increases in their volume growth. So if it were siphoning off a lot of volume, some of these other companies, we're not really seeing it in CME's numbers.
I love that one. Thank you for mentioning it, Ryan. In fact, Heather, we just last week talked about CME Group just joined the strong buys last month of 7 Investing. They're in the end of June, so totally on board with that as well.
And we have
go ahead.
Sorry, we have a deep dive on CME that we did last week, I think, or the week before. So if you go to our videos, I'll also link it in the description.
Yep. Great. So thanks again to Brett Schafer and Ryan Henderson, our guests on the show here today. We're talking about prediction markets. I would highly encourage following them on Twitter at Chit Chat Stocks or on their YouTube at Chit Chat Stocks there as well. Easy to remember. Also, thanks for Ryan for the great work that he's putting together at Fiscal AI. We showed several of those graphics on the show. Brett and Ryan, this was a lot of fun. Thanks for being on the show here today, guys. I really enjoyed it.
Thank you for having us, Simon. Yeah. YouTube, also Spotify or Apple for people that like the traditional platforms. But yeah, really fun to talk about. Fascinating industry. And even if there's not that many investing takeaways today, it's going to have a huge impact on financial markets. I think prediction markets will over the next decade, however it shakes out.
Thank you, Simon, Heather. Pleasure to be on.
This is a really good show. We got to have these guys back again here in the near future again. Thanks for tuning in for this episode. Hope you had a great July 4th last week, and I hope you have a great weekend. We will see you again on Monday. Take care.